Hi, welcome to this video. On this video, we're now starting to look at some of the concepts of trading. Um, and remember, it is more important to understand how to think, how to approach the market. You got to understand that first before you now start doing. Because if most of you know that 90% of new traders lose 90% of their accounts in 90 days, their first 90 days of trading. Now, the reason why I am doing this for you is to make sure you're not in that category. So do not approach this the same way you have approached other content you've been watching. Just follow me through on this, because when you follow through on this, you will fully understand it. Now, when you're trading, whether you're trading Forex, cryptos, equity, which is shares, or just anything, commodities, right? Indices, whatever you're trading. At the end of the day, it's price that we trade, right? In 2025, right? You're trading the price of that commodity or that asset or that instrument, right? So the most important part or the foundation of what you need to be doing to be successful in your trading will be to understand price. And so I'll quickly go through this and show you the things you need to be thinking about to consider on the charts about price. Okay, so price. There are two ways that typically price is represented on the charts, right? I'm sure some of you have seen something that looks like this, like a rectangle, and then this here. Now it's like a candle, like a normal, paraffin candle, where you have the body of the candle, then you have the wick on the top. But in this case, we have wicks coming out at both ends. So it's like burning the candle at both ends, which is crazy. But yes, that's what this represents, right? So we see sometimes it's like on this chart here, you see the green, but you also see candles that are colored red, right? The color does not make you money. The color is not the important thing, but the color represents something. And that's what I'm going to be talking about now, right? So when you look at this top wick, as it were, where that wick stops, that is usually the high of that candle, right? And this bottom wick is the low of that candle. It's the same as this here, the high of that candle and the low of that candle, right? But then the difference between these now come when we have to consider the open or the close. So the open price of that candle or the close price of that candle, right? So in a situation where the close price of that candle is higher than the open of that candle, it means that candle closed higher than where it opened. That is what we typically will represent as a green candle, right? As a green candle, right? Colored green. Now, some people color it white, some people color it pink. It's not the color that is important thing, is to understand that the close price of that candle is higher than the open. Typically, then that candle is called a bullish candle, right? Now, the other one, the situation there is where the close price is lower than where it opened, right? So it kind of closed lower than where it started from, right? And that's what a lot of people represent on their charts as a red candle, right? So the key difference then is this is either the open or the close, but depending which one it is either the bullish, and the second one is then called a bearish candle, right? So this is a bearish candle, right? So the high is where the wick of that candle stopped at the high at the top, and the low price is where the wick of that candle stopped at the bottom, right? So that's your candlesticks, right? Understanding that, right? That's the candlestick.